Welcome back. This is Seewing Yee, and today I'm going to talk about the poster child of the current housing market correction. I'm not going to say the crash on Austin, Texas Metro. All right. Welcome back, everyone. This is Seewing Yee, of course. And so let's dive deep to see what's going on with the Austin, Texas market. I'm going to use the Redfin weekly housing market data. Of course, I know Austin very well. Over the past 20 years, we have taken our California real estate investors over to Texas and other markets to buy turnkey cash flow markets. And over the years, we have done well. But this last few years, we have Austin, Texas has gone through some housing corrections, and I'm going to go over the data and to dispel any potential misconception or any kind of myth that's been putting the information putting out there by whoever, by the negative headlines, and dive deep into it and to see whether the housing crash bros, what they are saying there's a crash in Austin. So see, I can only go over the concrete data. I've been in real estate investors for more than 2 decades, and I consulted thousands of real estate investors to buy in many different markets in the country over the years. And so from a high level, I do know about the Texas market very well, and we are still promoting investment properties in many areas of Texas and even outside Metro of Austin. The Metro of Austin is going through some very interesting dynamics, and it's really eye-opening. So without further ado, let's do this. By the way, today's as I'm recording this is on the 5th of June, and the volatile mortgage rate, according to Mortgage News Daily, is down to 7.03%. Go figure, right? And as you can see, the rate has been decreasing quite consistently over the past few weeks, actually. From May 29th, the rate was 7.34%, and now the rate is 7.03%. Imagine if the mortgage rate go below 7%. It went below 7% down to 6.99% a few weeks ago, remember? Then it went on back up in past 2 weeks. Now back down to the threshold of around 7%, at least according to Mortgage News Daily. But anyway, so there's some very interesting dynamics. So with that in mind, let me go back to the share screen. Go back to the housing market data Redfin. All right, so let's go over the new listings. Yes, by the way, since I live in the Bay Area for many years, many of the Silicon Valley people, they have, during the pandemic, obviously, because of the remote working, they could work remote during the pandemic, the onset of the pandemic. They were able to, many of our Silicon Valley, San Jose Bay Area, they moved to Texas, right? Work remotely, so they bought homes there during the 2021 and the first half of 2022, and the Austin metro market just totally skyrocketed during the 18 months time frame. So we could touch more on that. Let's go over to new listing for today. This month actually, from April 29th to May 26th. The yellow line, as you can see, is 2024. The new listings were only 8.2% year over year higher than 2023. And so it's pretty much in alignment throughout the past 4 years of this pandemic and post-pandemic timeline. So nothing out of the ordinary in terms of new listings. Let's go over pending sales. And about this, a lot of inventory has come into the market in Austin. I'm sure a lot of people are aware of that. Just because there's a lot of active listings, the pending sales are not coinciding with the new inventory. So a lot of the active listings are not, for whatever reason, are not being sold based on the rising volume of active listings. So pending sales has gone down recently, ever so slightly. down 6.3%. Pending sales down year over year compared to 2023, as you can see right here. And the pending sales also was down compared to 2022 and 2021 right here, right? In 2021, we had like a little bit more than 1,000 transaction pending sales. Now there are only 738. So let's try to connect the dots, if you will. Before we do that, let's go over now. A lot of people really want to know. Let's look at the medium sale price in the Austin Metro. Now, medium sales price, and you can see year to date, June of 2024, June the 2nd, is 455,000. So year over year, 3% lower than 2023. Now, the trend is this: at the beginning of the year, 2024, the medium sales price was 439. It went a little bit higher up the first few months of the year, slightly higher, then went as high as 469 a couple of weeks ago. Then from May 19th to June the 2nd, it has dipped from 469 to 455. So you see, I don't know how this downward trend will continue the next few months. It will remain to be seen. We will monitor this median sales price scenario. But look at this. Look at remember 2022 when the mortgage rate, why the housing prices skyrocketed at the beginning of 2022 from 474 all the way to 574 in about 6 months time frame. In early part of 2020, the home prices jumped like almost $100,000. The median sales price, that is. Let me tell you why that's the case. Okay, so let's track it. Let's go with the mortgage rate. The mortgage rate, we all know, it was a historical lowest interest rate in the history of mankind during 2021, right? And that's why a lot of people refinanced, a lot of people bought homes. There were bidding wars in Austin around this time, during April 2021. I remember because we were promoting income properties, my network, that is, during that time. And we have seen my network realtor in Austin, in one case, there were like 300 offers per house during the peak of the housing boom back around the middle of 2021. Isn't it amazing? 300 offers on per house inside Austin. Okay, now that's where what goes up, what goes way up in terms of housing prices during the onset of the pandemic must come down, really? We don't know. We don't know. Are we seeing a housing crash in Austin? Are we seeing housing correction? Whatever that means. So let's dive deeper into this. The mortgage rate at that time let's go over 2022. At 2022, we were still doing very well. In January 22, the mortgage interest rate, according to the Mortgage News Daily, is approximately 3.6 to 3.7%. Still very robust. A lot of multiple offers transaction with a low rate. A lot of people could afford to buy a house at that time because of the lower monthly mortgage payment. Then starting around April, May, June, July, look at it. Around April, the mortgage rate was creeping up already to 5.45% in April 2022. Then, a few months later, it went all the way up to 7.2% in a mere 4 to 5 months from 3.2% early part of 2022 all the way up to 7.2% in November 2022. That 4 or 5 month stretch, the mortgage payment was literally double, triple. As a result, it caused home prices to come down. As you can see, the home prices at the peak, May 22, when the mortgage rate, as I told you, then the mortgage rate in the second half of 22, when went up, then look at the housing prices. It went all the way down from May 2022, from 574 median price, May 2022, all the way down for the rest of the year, all the way down to 459 during the second half of the Austin metro market correction, because, as I said earlier, it's because of the mortgage rate acceleration. Okay, until look at this November, look at it all the way to 7.29%. Then, of course, the last 18 months has not get any better. The rates have elevated really high. So the demand, obviously, the demand subsided greatly. And as a result, the Austin market really took a downturn. And then, so we fast forward to 2023 right here. Okay. And then at the median price is 454. So entire year 2023, there's a very consistent, pretty steady level, pretty stabilized in terms of median sales price, but a little bit lower than 2021, obviously. And then 2023, the blue from yeah. Then 2024, we still are down here. So we have the peak was right here. So we went down from the peak of 574 down currently 455. 455 from 574. So we're talking about $120,000 less on today's median price in Metro Austin today, June the 2nd, 2024, according to Redfin, from the peak May of 2022. All right, that's what's happening. Remains to be seen what's going to happen. So let's go over the next important things we need to go over is active listings. Okay, this is another important trigger. Here it is, active listing. Think about this. Active listing for June 2024 is 13,395. We're talking 16% more active listings year over year compared to 2023, which is right here. 2023, there were 11,538. And in 2022, 2 years ago, the active listings were 7,326. Before, again, the latter part of 2022, the active listings went way up because of the lowering of the demand as a result of the skyrocketing of the rates that has occurred that took a lot of people out of the purchase market. Of course, during the housing boom in 2021, there were very few listings, 5,600 listings back in 2021 compared to from 5,500 to 13,000. We're talking almost triple the amount of active listings from 2021 at the housing boom compared to June of this year, 2024. So the next few months, we're going to find out. I know the spring buying season is over and the active listings is trending up for the past 4 months. If the active listing continue to trend up this way, then we can continue to have an excess inventory and too much supply, maybe not enough demand. Then as a result, it would put downward pressure on the median price of homes. However, if active listings remain stabilized and the mortgage rate stays at 7% or lower than 7%, if by the end of this year, if the mortgage rate may come down, if they come down to from 7% currently to maybe 6.5%, you will unleash more demand. So there would be more inventory can come off the market. So therefore, the active listings will be like this, a little bit lower, and then the median price would put pressure of median price going up because of the lowering of the mortgage rate, maybe to 6.5%. We don't know. So it remains to be seen. And then let's look at the next metric is month of supply. As you remember, let me remind you, 4 to 6 months is a balanced market. It's not a buyer's market. It's not a seller's market. It's a balanced market. So that should stabilize the home prices. But if you have less than 4 months of supply of inventory, then you have a seller's market, and the seller will dictate the price and the terms. If you have more than 6 months supply of inventory, you're going to have a buyer's market where the buyer will dictate what the price and terms. So when the inventory is less than four months, that means you can have more than one buyer buying per home. You can have some bidding, a little bit of a bidding war like we're seeing right now in many markets, multiple offer situations in many markets. We're talking 3, 4, 5 offers per house right now in many other markets except Austin. Okay, so that's what's happening. So with supply, at the beginning of the year, there were huge jump and people putting their house into the market. there were weeks of supply. Then from February, March, April, May, the week supply has decreased. And then from March, April, May, the week supplies are increased little by little, whereby right now there are 21 weeks supply of inventory. So 21 weeks divided by 4 weeks for each month, 4 divided into 21, we're talking a little bit more than 5 months supply of inventory. So 5 months supply of inventory, as I mentioned earlier, 4 to 6 months is a equilibrium, is a balanced market. So 5 months is right in the middle. So Austin is going through a stabilization, going through a normal housing market. It's not crashing. For any market will crash, you need to have way more than 6 months supply of inventory, 6, 7, 8 months supply of inventory in order for any housing market to crash. And I don't see, based on the Austin metro data per Redfin, as I'm showing you, we are seeing the trend as of yet. All right, so let's keep that in mind. Okay, and as we conclude this, and the final metrics that we need to go over is the average. Let's look at the, no, one more, I'm so sorry, I forgot. Price drops. Okay, that's important, isn't it? Price drops are not trending vertically, so it's a gradual price drop. So this trend year to date for price drop 2024 is 0.1% of active listings with price drops. So this trending line is nothing to be concerned about, although it's creeping up little by little. So you remain to be seen for the next few months. For the rest of if the price drops continue to elevate, that means the demand is subsiding, and the seller will lower their sales price. So so right now there's not a concern, so we will monitor that. And finally, average sale to list ratio. This is the last metric that are important over here. So therefore, May 26, 2024, the average sales to list ratio in Austin Metro is 0.97%, 0.978. So we would say the final sales price were 2 percentage point less than the original listed price. Nothing to be concerned about, as I know, but very similar to year over year from 2023. But of course, compared to the pandemic boom in Austin Metro, because all those high-tech workers coming over and with their deep pockets, they are bidding on the home prices back in 2021 to an amazing skyrocketing level. Look at back in the early part of 2022, the first few months, look at the average sales list price is 1.06. You're talking, the sales price is 6% over the list price. So as a result, 1.06% in May 2022 and 1.09% May of 2021 indicates there are massive multiple offers and bidding wars, as I mentioned earlier. And so as you can see, you can see that let's go over the median sales price. You can see at the beginning of 2021, the orange color right here, in January 2021, the median sales price was $368 in Austin. So you fast forward over here from January 2021 to May of 2022, we're talking like 15, 16 months later, the median sales price is $574. From $368 to $574 at the peak of the 2022, and now it's back down to $455. So even when January 21, $368 to now, June 2024, so $455. So still a very significant appreciation of homes. So, a number of our investors who bought outside Metro, not inside Metro, like 20 miles, 30 miles north and 30 miles south of Metro Austin, they bought some very inexpensive income properties, and they have done well. And there's a slight correction in the Metro area, Austin, but investors that I work with, they're not going to sell. On paper, some of them have lost a little bit of money, at least on paper, right? If you sell, then you have to subject to the market conditions. But the long-term investors that we work with, this they can buy and hold for 6, 7, 8, 9, 10 years. So they'll be fine. The market will come back, even in Austin, because look, Austin is Silicon Valley 2.0, right? There's all the major high-tech companies are still here. Elon Musk and Apple campus. You have all the top high-tech companies are here. The infrastructure in Austin Metro is really growing still. Yeah, I would say this is a correction in the Austin market. I wouldn't call it a crash. I think long term, Metro will do fine. We just going through a correction because houses have gone up so fast during the housing boom 3 years ago, 2021. To be seeing, so there's a lot of bargains, right? Housing prices have gone down. There's more inventory, the new construction, the builders are releasing a lot of those inventory. I wouldn't say they're saturating the inventory market in the local area in Austin, but there's a lot of good deals available, right? You get a lot of discounts. The new builds you can buy down the rates for a primary homeowner and an investor. Instead of paying the 7% rate or whatever, you can buy down the rate to like 4.25%, 10-year fixed. Or many builders are providing incentives, right? Rate buy down, if you will. So there's a lot of good deals happening. So it's a slight buyer's market. But again, so the future will be very bright. It's just these past 2 years, Austin and some areas of the country also have gone through some housing correction. So again, investors and primary home buyers, you have to stick it out, invest for your home for long term. You can overcome this volatile market, because if you don't sell, so it's just paper. So what on paper you lost 10 to 20%? You're not selling. You live there for the long term. It's fine. So I wouldn't panic. It's not a doom and gloom here in the Austin market. But anyway, so remains to be seen, right? It all depends on the labor market. It all depends on the mortgage rate right now, because the home prices have gone up so much in the past few years, and the mortgage rate has gone up so much. A lot of people cannot afford to buy homes. Also, there are more renters now than ever before. So that's a silver lining to everything. All right. So anyway, that's all I have to say. As I conclude this video, if you see any kind of value on this video, please like and subscribe to my channel and comment below what you think. For those of you who have been living in Austin for all these years, what's happening in one neighborhood. If you're an investor, tell me what's going on with your investment property. Are you still renting nicely? Are you getting cash flow? And so you are a potential buyer. What pockets of Austin is doing well? Or you are able to get some kind of discount, 10% reduction in value on some of the properties you're buying right now? Because right now is a great time because there's less competition out there. You can make some good deals if you are buying, right? If you're a buyer, there's a lot of opportunities. So to get some great deals in this challenging market. There's always a silver lining depending on your situation. Okay. And finally, you might want. I encourage you to put down your email into my website so you can become a free member of our investment network, or several thousand members. You'll get free investment information, videos, and newsletters coming to your email inbox on a weekly basis. So you potentially become a realistic investor, right? And learn about investing in different markets, cash flow markets, good areas. All right. Thank you so much. This is Seewing Yee. I will see you on the next video. Bye-bye.